Welcome back to Investing Talk Podcast. We're so glad you're joining us today for another look into a company that's, well, it's been on many of your minds. You send us your articles, your research, your questions, and we do the work of distilling it all down, trying to get to the most important insights, help you get informed quickly and thoroughly. Today, we're tackling a question that's highly relevant for, I think, many of you looking at the biotech sector. Is Replimune a good time to buy now? We've gathered some fascinating sources that shed light on this clinical stage biotechnology company. Our mission today is really to unpack the current landscape for Replimune. We'll look at everything from its financial health, its market behavior, future potential, so you can get the full picture. And before we jump in, just a quick note. If you're finding value in these discussions, please consider subscribing, liking, leaving a comment. It really helps us reach more curious minds like yours. You can also support us by buying us a coffee. And if there's a specific company you'd like us to look into, please leave a comment below. So let's maybe peel back the layers here.
Understand Replimune's foundational business model. What exactly should we understand about this company right from the start?
Okay, so Replimune, it's a clinical stage biotechnology company. Their core focus is on developing what are called oncolytic immunotherapies for cancer treatment.
Oncolytic immunotherapies. Sounds complex. What does that actually mean in practice?
Yeah, it does sound a bit jargony. Think of them like genetically modified viruses. These viruses are specifically engineered to do two key things. First, they directly infect and kill cancer cells. And second, they sort of teach the body's own immune system to recognize and attack those cancer cells more effectively.
Ah, okay. So a dual action kind of thing.
Exactly. It's a dual action approach. The aim is to overcome the resistance you sometimes see with other cancer treatments. But what's absolutely crucial to understand upfront, and this is highlighted in the analysis we're looking at, is that Replimune currently shows no profits. It has negative earnings, and it's very much in an early revenue growth phase.
Right. No profits, negative earnings. That's a critical distinction. So for an investor, what does this foundational identity really mean? It sounds, well, inherently high risk.
It absolutely does. It means we're looking at what you'd call an extremely speculative stock. You're not valuing, a cash flow generator today. It's really a bet on future scientific validation. So it's more suitable for long-term investors, people who have a genuinely high tolerance for the inherent and pretty significant risks in the biotech sector.
Especially clinical stage.
Especially clinical stage. This is a wager on a scientific breakthrough, definitely not a predictable earnings play.
Okay, with that context set, let's dig into the actual financial numbers, see what they tell us about its prospects. When we talk about early revenue growth, what does that actually look like for Replimune?
Well, this is where it gets really interesting looking at the projected revenue figures.
Yeah.
They illustrate that early revenue growth idea perfectly. The forecasts suggest a sharp, almost exponential increase. We're talking from approximately $21.75 million in 2025, jumping to $63.95 million in 2026.
Wow.
And then a really substantial jump to $141.6 million in 2027. So this isn't just growth, it's a projected surge. It indicates the market is anticipating significant progress, their pipeline reaching commercialization.
That is a significant lead in projected revenue, no doubt. But you mentioned the company isn't profitable yet, in fact, substantial losses. Can you elaborate on that, the current financial losses and what that implies?
Absolutely. The company is indeed not profitable, and that's a key part of its speculative nature right now. It has a trailing 12 months net loss of about $247.3 million. That comes with a negative EPS of negative 3.07.
Oof.
Yeah. Now, while losses are expected to continue for some time, let's say the good news is that earnings per share are forecasted to improve gradually as those revenues hopefully start to materialize and scale up.
So there's a path, but it's not there yet.
Exactly. A path toward, but not yet at, profitability.
And what about debt and cash flow? For a company at this very early stage, especially one burning through, nearly $250 million annually, what does the data suggest about its financial runway?
Yeah, that's a great question. The data we have doesn't explicitly detail specific debt levels or precise cash flow trends, but as a clinical stage biotech with such significant losses, it's highly typical, almost expected, for Replimune to be dependent on external financing and consistent capital raises to fund its really intensive R&D.
So they need money coming in constantly.
Pretty much. It means they'll need a steady inflow of capital just to keep their programs moving forward. The cash burn rates are high, which, directly impacts their operational runway and definitely ups the urgency of achieving those clinical milestones.
Okay. So given the intense competition in the cancer treatment space, what specifically gives Replimune its edge? What sets them apart from Well, the huge number of other companies chasing similar breakthroughs.
Right, it's a crowded field. Replimune's true differentiator isn't just having an oncolytic immunotherapy platform. It's the specific design of their lead candidates, RP1 and RP2.
RP1 and RP2. Okay.
They're engineered not just to directly attack tumors, but also to kind of supercharge the body's immune response against the cancer in a more robust way. The goal is to overcome that immune suppression you often see right around the tumor and address resistance that can develop with other immunotherapies.
So it's trying to be smarter than the cancer's defenses.
In a way, yes. This nuanced dual-action approach, if it's successful in trials, could unlock significant clinical breakthroughs and, well, provide a genuine competitive advantage. That's the bet.
Understood. Now, when a company isn't profitable, has these significant losses, how do we even begin to value it? Traditional metrics like price-to-earnings ratios, they don't really apply, do they?
Yeah. You're absolutely right, they don't. Since Replimune is incurring losses, it doesn't have a meaningful PE ratio or even a forward PE ratio. We're kind of in a different valuation world here. We look at its market capitalization, which is currently around $547 million, and we compare that to its projected future revenues.
The ones that are still way out there.
Exactly.
Yeah.
This high valuation relative to revenues that are just starting is entirely typical for developmental biotechs. Investors aren't betting on current earnings, they're betting on the future potential of the drug pipeline.
A future that's still years away, and as you said, filled with uncertainty.
Completely. Riddled with clinical uncertainty. It's essentially a bet on innovation itself.
Okay, now, as I was looking through the sources, this detail about its stock performance really jumped out. The price swings, they've been wild, almost a roller coaster. The source mentions substantial volatility. A 52-week range from $2.68 to $17. That's massive.
Indeed. Yeah, recent price action certainly shows high volatility. The current prices, around $7 to $7.62, they just reinforce that it's prone to really significant swings. However, here's where it gets particularly interesting. The source also mentions a beta of 0.62.
Yeah, that figure puzzled me too. A beta of 0.62. On the surface, that suggests less market sensitivity.
Yeah.
Yet we see these incredible price swings, like that $2 to $17 range you mentioned. Can you help us square that? What's really driving those sharp moves despite the seemingly low beta?
That's a crucial point, and it really illustrates the unique nature of clinical stage biotech investing. You're right, a beta of 0.62 technically does indicate less volatility relative to the broader market like the S&P 500. But for a company like Replimune, its internal company-specific risks, they're so profound that they often just override market correlation.
So the company news trumps market news.
Precisely. Those dramatic swings you're seeing. They're driven by the highly anticipated, very binary outcomes of clinical trials or regulatory announcements, maybe financing news, not necessarily by what the overall market is doing day to day. So while it might not track the S&P perfectly, its own journey is packed with these high-stakes events that can send the stock rocketing or plummeting completely independently.
Okay, that makes a lot more sense. It's a vivid reminder that for these companies, company-specific news is often the dominant force.
Absolutely. The idiosyncratic risk, as they call it, is huge, even if the systemic risk measured by beta is lower.
Got it. So given this volatility, what do the technical indicators like, say, ND and momentum tell us about its short-term trajectory?
Well, currently, those indicators are actually negative. They're signaling some short-term bearishness. However, the overall technical picture is quite mixed.
Thanks, Tel.
It just suggests there's no clear, strong, sustained trend in either direction right now. Which kind of aligns with what we were just saying. The stock seems more reactive to specific news events rather than following a smooth technical pattern.
Okay. So for investors trying to navigate these, well, let's call them choppy waters, where are the key price levels they should be watching, both for potential support and resistance?
Right, some guideposts. Based on the technical analysis, immediate support for Replimune appears to be near $6.67.
Okay, $6.67 on the downside.
Yeah. And on the upside, resistance seems to be in that recent range of, say, $7.60 to $8.25, which, interestingly, aligns pretty well with the consensus analyst price targets we can talk about next.
Ah, convenient. So those are the key levels to monitor.
Definitely crucial levels to watch for potential entry or exit points, depending on your strategy.
Okay, moving beyond the raw numbers in the charts, what's the general sentiment around Replimune right now, especially from, Wall Street analysts? How are they viewing its prospects?
Well, the analysts, on average, they actually rate Replimune as a buy.
A buy. Even with the losses?
Even with the losses. The consensus price target is sitting around $8.25. Now, that implies about a 17% upside from the current levels we mentioned. This buy rating, despite the lack of current profitability, it really underscores the strong belief analysts have in its future potential, the promise of its pipeline.
That is a positive vote of confidence. Interesting. And are there any big specific upcoming events, things that could act as major catalysts and, significantly move the stock price?
Yeah, that's the next logical question. What are the potential triggers? Well, the next earnings report is scheduled for August 11th, 2025. That could certainly act as a significant, though likely more short-term, catalyst.
All right, earnings. But beyond that,
Beyond earnings, honestly, the most impactful catalysts are going to be the upcoming clinical trial readouts, specifically from their main programs, RP1 and RP2.
right, the clinical trials. Can you elaborate on those? What specific milestones should investors really be watching for, and what do they signify for a drug actually getting to market?
Sure. For any clinical stage company, the phase 1, 2, and 3 trial readouts are everything. Phase 1 is mostly about safety. Phase 2 starts looking at efficacy and figuring out the right dosing. And phase 3, that's the big one, the large-scale pivotal trial needed for approval.
So each phase is a major hurdle.
A massive hurdle. Any positive data from these, especially the mid to late stage trials for RP1 and RP2, could just profoundly affect the company's valuation, send it way up. And conversely, negative data can be crushing. Additionally, any possible regulatory developments, say news from the FDA or European agencies, or even new partnership deals, those could also provide a significant boost.
Why partnerships?
Well, they often validate the technology in the eyes of the market, and importantly, they can provide much-needed non-dilutive capital.
Gotcha. And generally, what's the sort of social media buzz, the broader public sentiment like for a company in this kind of high-stakes position?
Yeah, if you look beyond the analyst reports onto places like Twitter or stock forums, the sentiment is, as you'd probably expect, highly speculative.
Lots of hype.
Lots of hype, lots of fear sometimes. It's not always about factual analysis. It's often more about the collective emotions surrounding these potential breakthroughs. And for a stock that's driven by these binary outcomes, this speculative buzz can really amplify the price movements, both up and down, which makes it even more important for serious investors to try and stick to the fundamental data, the clinical progress, rather than just the hype cycle.
Good point. Okay, every investment comes with risks. For a clinical stage biotech, I imagine they're pretty significant. What are the main ones we need to be acutely aware of for Replimune?
This is absolutely critical for anyone even thinking about this stock. There's what we call high binary clinical risk.
Binary meaning 1 or 0, success or failure.
Exactly. It means the success or failure of their clinical trials can just drastically impact the company's entire future. It's often not a partial success or failure. The whole trajectory of the company can hinge on these specific outcomes. A positive trial could send it soaring, like we said, but a negative one could be devastating.
Okay, that's number one. What about its financial sustainability? You mentioned the significant cash burn earlier. How does that translate into risk for current shareholders?
Right, the cash burn, it means the company is spending a lot more than it's bringing in. That leads directly to what's called dilution risk from future capital raises.
Meaning they have to sell more stock.
Almost certainly. They'll likely need to secure more funding by issuing new shares, and that can dilute the value of the shares that current holders own. It also means they have a finite runway, a limited amount of time they can operate without getting more external capital. That puts real pressure on getting timely, positive trial results.
Makes sense. And given the dramatic swings we've seen, the importance of clinical news, how sensitive is the actual market valuation to breaking news?
Extremely sensitive, highly reactive. The market valuation can swing wildly based on clinical trial outcomes, regulatory approvals, even just small snippets of interim data. Positive news can send the stock soaring, like we keep saying, but setbacks, no matter how minor they might seem sometimes, can cause sharp, rapid declines. This is definitely a stock where you need to be constantly tuned in to company announcements.
You mentioned its moderate beta earlier, which hints at less market-wide volatility, yet that 52-week range just screams wild price moves. Can you maybe just reinforce that apparent contradiction in terms of risk?
Yeah, it's worth repeating. While the moderate beta might suggest some stability relative to the overall market, it absolutely does not reflect the intense company-specific volatility. That wide 52-week range clearly shows the potential for sharp moves, both up and down, driven purely by those internal binary outcomes we discussed. So an investor isn't protected from dramatic price swings just because the beta is low. They're simply facing a different type of volatility.
One tied to the science.
Exactly, tied directly to the company's unique scientific progress, or lack thereof.
And are there broader sector risks, things beyond just Replimune that apply here?
Yes, absolutely. You can't ignore the sector risks. These include navigating really complex, often evolving regulatory hurdles set by health authorities like the FDA, and of course, facing intense competition within the immuno-oncology market itself. New treatments are constantly emerging. Replimune has to demonstrate clear superiority or at least significant differentiation to eventually capture market share. It's a tough neighborhood.
Okay, so after all this analysis,
Yeah.
pulling it all together,
Yeah.
what's the ultimate rating and recommendation for Replimune? Is it truly a good time to buy now, maybe for the average investor listening?
Well, the analysis we reviewed rates Replimune at a 5 out of 10, right in the middle.
5 out of 10, okay.
It's categorized specifically as a speculative buy, and I want to stress speculative. It's really only for long-term investors who are not just comfortable with high risk, but who also understand and fully accept the inherent volatility and that binary nature of biotech stocks at this clinical stage. It truly lacks profitability right now, that's undeniable, but it does show that promising revenue growth potential down the line, and it benefits from that positive analyst sentiment we talked about. The key word, though, is speculative.
Right, speculative buy, long-term high-risk tolerance needed. And for those very specific investors who fit that bill, what's considered maybe a reasonable entry point to potentially mitigate some of that risk?
The analysis suggests that an entry price somewhere around $6.50, $7 might offer a more reasonable risk-reward profile.
Why that range?
Well, especially when you consider the analyst target near $8.25 that we mentioned and those technical support levels around $6.67. That range could provide a slightly more favorable starting point for a long-term holding, potentially offering a bit more upside relative to the immediate downside risk.
So it's definitively not one for short-term games,
Right.
or try and make a quick flip.
Precisely, no. Its investment horizon is much, much better suited for long-term investment. The goal here really would be to capture value from the pipeline progress over time, allowing those scientific milestones to play out, hopefully successfully. Definitely not trying short-term trading, given the mixed technical signals and that extreme event-driven volatility risk we've discussed so much.
Makes sense. Any final crucial advice then for managing risk if someone were to actually consider this high-stakes investment?
Yes. A couple of things. For maybe more active traders, if they were even considering it, setting a stop loss, perhaps around $6, could help control downside risk. And maybe take profit levels could be eyed near those analyst targets, $8.25 and maybe above. But overall, for any investor, continuously monitoring the clinical updates, the earnings reports, regulatory news, that is absolutely critical for this type of investment. This is definitely not a set it and forget it kind of stock.
No, it requires ongoing vigilance.
Absolutely. Vigilance and a real understanding of the scientific progress, or lack thereof.
Wow, what a comprehensive look at Replimune. It's abundantly clear that, well, yes, it's a high-risk, growth-oriented biotech stock, and it has some promising early fundamentals. It also comes packed with considerable event-driven volatility.
Yeah, and if we just connect this back to the bigger picture for a second, this kind of stock, Replimune, it perfectly illustrates that high-stakes, high-reward nature of investing in pure innovation, particularly in groundbreaking areas like cancer treatment. It's almost like direct participation in the future of medicine,
Yeah.
with all its inherent challenges and potentially its huge triumphs.
Exactly. So what does this all mean for you, the investor listening? It really challenges us, I think, to think deeply about our own risk tolerance, our own investment horizon, doesn't it? What do you truly look for in a company that hasn't reached profitability yet, but shows immense scientific promise? Are you an investor primarily in present earnings, or are you more of a speculator on future breakthroughs? Something to think about. Thank you so much for joining us on Investing Talk Podcast. Remember, subscribe, like, comment. Consider buying us a coffee if you enjoyed this discussion. It really helps. And if you have another company you'd like us to dissect, please let us know in the comments below. Until next time, keep learning and investing wisely.